When markets crash, panic spreads through the headlines, and your portfolio starts to shake. Only one question haunts you. Should I run or act? But what few people realize is that crises are the favorite moments of the world's greatest investors. It's not magic, and it's not luck. It's all about preparation, vision, and strategy. You are the captain of your ship. The storm is approaching, and you're not just going to weather it. You're going to use it to go even further. Before we talk about investments or how to act during a crisis, we have to start with your own financial ship. Not someone else's. Yours. Because no matter how strong the boat is, if the captain isn't ready, it won't survive the storm. First, build an emergency fund. Not just a nice idea, but a real safety net, ideally enough to cover 3 to 6 months of your essential expenses. This is money kept in an accessible account, not to make more, but to avoid losing when life throws you a curveball, job loss, unexpected bills, or a market downturn. Then, get serious about eliminating toxic debt. Credit cards, payday loans, consumer financing. These are like anchors dragging your boat when you need to stay agile. Every dollar you pay down here is a dollar freed up to face future challenges. And finally, think about diversifying your income. You don't need to launch a startup. Maybe you have a skill that could bring in freelance work, or a side hustle you've been considering. Even small streams can make a difference. Think of it as adding another sail to your ship. Many people think diversification just means owning a little bit of everything. But real diversification is a survival strategy, not a trend. Start by looking at asset classes: stocks, bonds, real estate, and cash. Each responds differently when the economic winds change. Some fall, some hold steady, some rise. Your portfolio is stronger when it doesn't rely on just one pillar. Then, think in geographic terms. If all your savings are tied to a single country, currency, or market, you're exposed to local risk. Spread it out across the US, Europe, Asia, emerging markets, even with modest amounts. And don't underestimate the value of cash on hand. Having liquidity isn't weakness, it's a strategic advantage. It gives you time, options, room to breathe. It lets you act, not react. In a crisis, cash isn't lazy, it's patient power. No captain sets sail without a compass. In finance, your compass is made of self-knowledge and economic awareness. Understanding economic cycles, expansion, slowdown, recession, recovery, won't turn you into a fortune teller, but it helps you read the waves and avoid blind sailing. Define your risk tolerance. How much volatility can you handle emotionally? How far can your portfolio drop before you panic? Knowing this helps prevent emotional decisions that lead to costly mistakes. Finally, put automation to work. A simple recurring transfer into savings or investments, even small, creates consistency. Discipline doesn't have to mean strict control. It can mean freedom through routine. It lets your strategy run even when you're tired or overwhelmed. And in times of uncertainty, that can make all the difference. When the storm hits, when the news is red, the markets are down, and everyone is running for cover, it's easy to panic. But that's exactly when your mindset matters most. The first trap is the panic sell. It's like tossing your supplies overboard because the waves are high. Yes, the value of your investments may drop, but unless you sell at a loss, it's not real. The only time it becomes permanent damage is when fear forces you to abandon ship. Next, beware of the new heroes, the influencers, gurus, or quick money schemes that emerge during chaos. They promise shelter, but often they're just mirages. If someone says they have the perfect opportunity, ask yourself, if it were that perfect, would they be selling it to strangers on the internet? Finally, resist the urge to borrow to speculate. Taking on new debt to buy the dip is tempting when prices fall. But if the storm gets worse, you'll be sinking faster, not rising. This is the time to be measured, not reckless. Just because the storm is raging doesn't mean you have to be adrift. There are anchors, solid places to stabilize your financial position. Gold and precious metals are classic for a reason. They don't produce income, but they tend to hold value when markets collapse. They're not a magic solution, but a shield. Government bonds from AAA-rated countries can be a stronghold. They may offer modest returns, but during panic, they provide something rare: predictability. Then, consider strong currencies. If your home currency is losing value, holding reserves in more stable ones can protect your purchasing power. And don't forget defensive sectors in the stock market, like healthcare, utilities, and consumer staples. Even in a downturn, people need medicine, water, electricity, and basic goods. These industries often remain steady when others collapse. They are not glamorous, they are reliable. Even in the storm, the most skilled navigators start scanning the horizon. Where are the winds starting to shift? What will be the first signs of recovery? One strategy is value investing, looking for companies with strong fundamentals but temporarily low prices. Not cheap stocks, but undervalued assets with long-term potential. Think of it as buying a sturdy ship at a discount because no one's sailing right now. Another is real estate. Though more advanced, it can offer huge opportunities during crises. Property values often dip during recessions, and those who can act calmly may acquire long-term assets at significant discounts. And don't overlook rebalancing your portfolio if your allocation is now overweight in one area. Say, cash or tech stocks. This is your chance to adjust your sales, restoring balance and preparing for calmer waters ahead. You've held steady. You've avoided the panic and planted seeds in the storm. But what happens next is just as important. In the final chapter, we'll explore how to transform the rebound into lasting strength, and how the lessons from this crisis can prepare you for the next. The clouds begin to part. The fear that once dominated headlines fades. Markets rebound. Confidence returns. And this is the moment when resilience pays off. Historically, recoveries don't whisper, they roar. Stocks that were battered begin to rise. Oh, assets that seem forgotten shine again. This is the sunlight after the storm, and those who held on now see the results of their patience. High-quality companies, the ones with strong cash flow, healthy balance sheets, and real-world value, often rebound first and fastest. Like the ships best built for the ocean, they're the first to move forward when the wind returns. But be careful. Not all assets rise equally. Inflation, interest rates, and debt burdens may shift the landscape. It's not just about growth, it's about understanding the new currents so you can move with confidence. Every storm leaves lessons in its wake, and those who reflect grow stronger. So what should you carry forward into your future financial journey? First, keep learning. Financial literacy isn't a one-time skill, it's a compass. Read, listen, ask questions. The more you know, the better you navigate. Second, stay long-term focused. Crisis or no crisis, real wealth is built over time. Having a clear plan and resisting short-term panic, that's how fortunes are made, quietly and patiently. Third, master your emotions. Money and fear are deeply connected. But when you learn to step back, breathe, and think with strategy instead of instinct, you go from being a passenger to the captain. There's something else that crises reveal. Not just our finances, but our character. Resilience is more than money. It's about your mindset. Did you adapt? Did you stay calm? Did you learn? Wealth isn't just numbers on a screen. It's your ability to act wisely, help others, and stay grounded when everything shakes. And if you made it through, even with some scars, you're stronger, maybe stronger than you thought. This experience can become your foundation, not only to grow your wealth, but to teach, to lead, and to contribute. Prosperity that lifts others is the kind that lasts. Surviving a crisis isn't luck. It's preparation, discipline, and perspective. You now know how to build your ship, navigate the storm, and set sail again with clarity and strength. The next crisis will come. No one knows when. But you don't have to fear it. Start now. Build your emergency fund. Review your portfolio. Keep learning and talk to people you trust. And remember, every storm ends, but only those who prepared come out stronger. If this video helped you, shift your mindset or gave you tools to feel more in control, give it a like and subscribe for more content like this. Share your thoughts. What's the one habit or mindset you'll take into the next storm? Drop it in the comments. And remember, storms don't build character. They reveal it. Let's make sure next time you're ready. See you soon.